Again, the Nigerian stock market is marginally lower. We did get the sense it was recovering yesterday, but right now it's about 36,371 points. That's 0.08% lower than it closed yesterday. Let's now cross to the Nigerian Stock Exchange, where David Andori is standing by to give us some perspective on what is driving the market. David, I think the key takeaway from yesterday was the fact that we saw much higher volumes, over 5 billion naira worth of trades. And I was speaking to an analyst earlier today. He did suggest that nothing to get too excited about the fact that the market was up yesterday. Do you share that sentiment? Do you get the sense that this market is about to trade sideways for another few sessions?
Yes, the volume that actually stabilized the market yesterday perhaps may have come from the intervention of market makers, because for most part of trading yesterday, demand was also very weak, and at a point the all-share index was down by up to about 0.3%. But in the last few minutes of trading yesterday, there was a rescue action, possibly by the market makers, that led to the recovery. Again, today, the market started on a bearish note. The market was actually down a few minutes ago by about 0.17%. Most of the sectors in the market were actually down, except the banking sector. Further analysis of the banking sector showed that actually it was only UBA that had appreciated. The
right.
Others were either static or they had lost marginally.
All right. David, if you can talk a bit about the market makers. You said they made a significant impact on trading yesterday, and it's perhaps a good time to review their activities. We know the market maker program was launched sometime last year, and a lot of people suggesting that it hasn't been as effective as it can be, especially because securities lending hasn't come to the fore. Your thoughts about how market makers are impacting trading today?
Yes, market makers have actually been very active in the market, especially at infusing cash liquidity into the market, in which case whenever the demand is weak in the market, market makers have been able to stabilize the market by increasing cash liquidity in the market. But at times of excessive demand, when more supply is expected in the market, market makers have actually not been able to respond appropriately by increasing stocks liquidity, because the securities lending program has not kicked off. But in terms of cash liquidity, they have been very active. Right. And in the instances in which they have been called upon to revive the market, they have discharged their responsibility creditably well. Right. You recollect that a few weeks ago, when the equities market suffered very serious decline, the market was revived as a result of the decisive intervention of market makers. And quite recently again, I mean within the past 1 or 2 weeks, when there have been serious threats of decline in the market makers have occasionally intervened, stimulating demand in the market.
Right.
And so from a side of their responsibility, they have been very active. Right. So we hope that in future, when the occasion demands for them to be active on the supply side, that the necessary machinery will be in place to aid their efforts.
Right, okay, so you say they're active, they're more active, but we continue to see relatively low volumes. I think the day before was just over less than 2 billion naira. Yesterday, of course, was an outlier where we saw over 5 billion naira worth of trades. So, but moving ahead, your thoughts as we wrap up the 8th month of the year, your thoughts about where the market is headed going into September?
Generally, the market has reacted to corporate disclosures that came in for second quarter of the year. We are still expecting the third quarter to end, and so we are not likely to see a market that will be stimulated by corporate fundamentals. But again, we are entering the season of the year where activities slow down in the equities market. This has always been the trend, although last year was a departure from that trend. However, from what we are witnessing now, it does appear that the market is heading back to that trend. But the global macroeconomy, together with the domestic macroeconomy, have not been favorable to the equities market. And so they could also be the factors that have defined the current state of the market. So moving forward, in the absence of any material price-sensitive information that may arise from corporate fundamentals, I believe that the market will assume a position of a dynamic equilibrium around these 36,000 points of the all-share index.
All right, David, before we wrap this up, very quickly, your thoughts about what could be a catalyst for this market next month, September. Sources suggest that the exchange should kick off at some point next month, and a lot of people calling that a game changer. It's going to attract a lot more investors to the market, retail investors, international investors. Of course, everyone can now log in online to trade on the NSE. So your thoughts about what that could mean for the market next month?
Yeah, that could actually be the game changer, really. Although next month it will only just be taking off, and more time will be required for the penetration to be material enough to attract more investors, both domestically and internationally, into the market. But it can be a game changer if what is planned actually materialize, that it will increase the manner in which stakeholders interact with the market now, and could actually increase the number of investors who interact with the market beyond the current 5 million investors to possibly over 40 million investors.
Right.
And so that has implication for demand activities in the equities market. In fact, in the entire market, both equities, bonds, and derivatives.
Absolutely, and of course we will be tracking